and Benzinga Vice President Luke Jacobi breaking down this market with you for the next 20 or so minutes as we head into the closing bell. Joel, this morning on pre-market prep, you were actually really for the past few weeks, you've been asking, no, you've been begging for a quieter market, smaller daily ranges, less volatility. And you got it today a little bit. You got your smaller daily range, Joel. Congratulations.
Yeah, well, Spencer, the day's not over yet. My
It's
upside
true.
target, still remains at 26.33. Not quite a 100-point intraday range. We did have some action off the 6 p.m. open last night. Got right down to a good weekly number, but it was only there for a nanosecond. Then you had to rally overnight, higher open, and they tried to bust it. They tried to bust it early in the first 15 minutes of trading. And it was just kind of like a tepid sell-off, and they never got it to the closing price where I was hoping it would get to for a lower risk long at 25.24. But instead, we turned around. We tested 2,600. We pulled back. We got a current high at 26.16. Our current high of the rebound has been 26.34.50. That was made early on Thursday, which was part of the Friday session. And then the 2-week high is 26.50. So market's coming in a very, very important area. The market has withstood a major test today so far. Anything can happen. But that's what I'm looking at here. Maybe perhaps clearing the path to 2780 or 2,800. That could be a 50% retracement. We'll talk more about market dynamics with Hawk Stocks Luke. Crude lower open, took out a double bottom, took out the low of the move, went to 1927. Now that represents the lowest level for crude oil since February of 2002. Holy moly, that was a long time ago.
And that's not even inflation adjusted.
No,
right? You adjust that for inflation over 20 years.
Yeah, it's hard when you do the futures and the charts and everything because the front month contract, a lot of different things go into the dynamics of that. But I was just thanks to Thinkorswim, I went to the Thinkorswim charts on that one, and that's where I came up with my lower levels for the crude oil market. The last commodity we like to talk about is gold. Gold bugs are having a hard time getting the bullion over 1,700. We've had the closing high of the recent rebound. That was at 1677, 1678.60. We couldn't quite get there today. Quiet consolidation here in gold. It better get up off the mat here real soon, or I think we could have some problems under 1,600. Let's bring in Hot Stocks Luke from Benzinga. How you doing?
Doing well. I was saying to Spencer earlier today, I feel like this is January 30th, not March 30th. Like what's up with the 3% day in the market?
Yeah,
this is like a throwback to 2 months ago.
All right, so let's look at some of your picks from last time that you were holding on to, and let's start with Fords. You bottom tick that. You're just sitting on that for the 15%. You don't have any price targets or anything in this one, correct?
Nope, just hanging out. Nothing in the story has changed. It's still a pretty cheap stock at $5. I was in just a little bit over $4, but I'm just hanging out there.
Okay. Also, Stryker.
Yeah.
Go ahead. Tell us about that one.
Yeah, I mean it's gotten a nice little bump. And still hanging out. I think this is one that's going to have an awesome quarter. When the numbers come out and the guidance comes out, I think it's going to be strong. We're spinning up so many new hospital beds, in non-traditional places. Like here in Detroit, we've got like a conference center that they said is going to have 1,000 hospital beds in it.
Yep.
I mean, Stryker's probably who they're buying them from. So I'm waiting on some numbers there.
It looks like you need to clear 164. 64.12 was Friday's high, 63.33 the current high in the session. I guess you were in the right sector, but maybe the wrong stock. Have you seen OMI today?
Not seen that one.
We talked about that.
Oh, is this from Kramer?
Yes. Yep. Up a tidy 53.5%. Caught some people short that one. higher open, had a wide range, but that's fitting into your striker play. And then I'll let you and Spencer talk about your last pick there, New York Times.
All right, NYT. This is one of my hot ones. I pitched this one long. Spencer said it was a bad idea, but we just had a Bloomberg report come out that Bloomberg just said that their subscription revenue on the website, not for the terminal, on the website for March are up 86% compared to February. So almost doubling month over month. And the reason why I like this stock initially is because I know our traffic and our subscription sales at benzinga.com are way, way up through the roof. I mean, everybody's just sitting at home and there's a crazy news cycle. So people have more time to read and there's more news to read. And the fact that Bloomberg came out and said they got 86% more subscriptions this month than last month, super bullish for that thesis.
All right. Looks like we need to clear a hurdle at 33. Your 2-day high, Friday's high, 32.97. Could only get to 32.85 today. Back down to 31.51. Nearly matching ranges in that stock today. 31.09 low Friday, 31.23 today. And as I mentioned, the highs at 297 and 285. So inside day, digesting the market. Looks like you got a little bit lower volume there in New York Times.
Yeah, and this is another one where I'm hanging out for that earnings number. I think that earnings report is going to be awesome.
But how much of that would it be priced in beforehand? So you'd have to think about that.
Yeah, but look at the stock price though.
Yeah.
You know what I mean? It's still down from the COVID. It's not hammered like like a Ford got hammered. But they should have an amazing quarter in the stock lower than it was at the previous quarter.
Okay, I want to switch to just broad market here. Looking at the overall S&P 500, it's a pretty orderly day. I mean, the energy is down. We know that. Nothing new there, and tech is up. We're seeing some strength out of the financials. Haven't seen too much of that of late, but JP Morgan's up today. Bank of America is up today. Wells Fargo and Citi not so much, but at least two of the big players are up. Consumer goods, we're seeing strength in those names as we've seen for the past couple of weeks. This is a weird thing that I noticed here. Las Vegas Sands, I'm not really sure why they have diverged so much today. Las Vegas Sands is up 2% and change compared to MGM, which is down 4%, and Wynn down 5%. So I'm not really sure, to be honest, the reason for that move, but it looks like a pretty orderly day. And Luke, you're talking about increased news flow. I don't think there's been a lot of new developments in the past couple of days. The cases and deaths are obviously still going up, but nothing in terms of any monetary or fiscal stimulus out of DC. The next round hasn't gotten underway yet, and I haven't seen too many like new headlines that would insinuate that we're going to be less hopeful going forward, right? You know what I mean?
Yeah, I mean, I'm on the same page there. I mean, I get the sense that the first couple of weeks it was just people slowly trickling in and figuring out how bad this thing is going to be. Like there are obviously people who caught it up front. Like I think Joel was calling it way early. But I know it took a lot of people time to figure out how bad it's going to be. And so the next round of it is probably just going to be, when is it going to get better? Once we start getting that news, I think it'll be really hot again.
I think go ahead, Spence.
My point was like for a couple of weeks there was a new like disastrous headline like every day. It felt like, right? It was like every day it got worse and it got worse and I'm still in the camp where I think we're going to head back lower here, but I haven't seen any new of headlines unless I'm being desensitized to it all, which is always possible.
I think you have market dynamics working here. And I think that you have the end of the quarter. And I think a lot of fund managers are sitting on a lot of money that they're going to have to deploy into the market. You see this cycle quite a bit. I'm not sure how nimble they were on the decline. If everyone's still sticking with their distributions and everything, there's going to be some big investments. And sometimes that could last a day or 2 or 3 days after the quarter. I think you have the market makers and the big traders ahead of that, knowing that money flow is coming in and they're getting ahead of it. And I'm not necessarily saying front running it or anything of that nature, but it's a lot easier to buy when you know in your deck, you're going to have, billions of dollars coming in. So I'm just looking at it from a market,
Yeah.
relief structure standpoint, that there's new money coming into the market. And also the fact that we just didn't have that crazy overnight, limit down situation. And so they're just juicing it. Also, this is one of those days where if you're really super bearish and you were fading moves, it really didn't give you much of a chance. There was, the early morning run up, we dropped off 20 some handles, but then it came right back. There were a few other 20 handle retreats, but there just wasn't like the 70, 80 point, you just put bids out there and it's going bam, 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 bam. They're just getting hit. So, market flow, market structure, market dynamics, I think are contributing to this rally today.
Yeah. And I stand corrected. XLE is actually green for the day. A lot of individual names are red, and if you look at just a heat map, a lot of the red on the heat map is coming from energy, but the XLE is actually green for the day, which is
what's up with oil? Was there new news out today? I mean, it's getting hammered again. The last I saw was like 1960 or something on the oil futures.
Well, you took out the low of the move. So you had people, you had a bunch of you had a pair of lows at the 2080 area. You had the low of the move at 2052. And then you just maybe had some nice juicy sell stops there at 20. And, you took out the low of the move. People threw in the towel. You got into the 19 handle, as I mentioned, 1927. So I just, just like people were hanging on. Hey, I'm going to lean on 2052. No, I'm going to lean on 20. So you cleared out those people. Now, tomorrow will be a very interesting day for crude. If you have the undercut, clear out everybody that was leaning on 20 and then ram it higher. I also saw on Pro, I don't have the exact details, that Russia and the United States are talking nice about the oil market, Putin and Trump. So
not nice enough.
Not nice enough to, yeah. So I'm looking at it. It settled. If it comes back to unchanged today or overnight, it might be a lower risk long for you. I don't think I want to risk it down to the low of the move at 1927. But you settled right in the middle of the range. So that's what I'm looking at, the dynamics in the crude market.
You know what's the one silver lining with oil being down is thank God these airline stocks have at least some positive thing going for them. They're sending all these flights at 15% capacity. At least the cost of fuel is down.
Yeah, it is. And we did mention that with Frank Holmes. The decimation of the airline industry, the travel industry just seems to be ignored today, folks. They take what the market's giving you and not try and look into it too much. So we're heading into the close. We just hit 21.75. That's shy of my daily target still, but hey, we got 6 minutes left. Hot stocks, Luke, you're adding a few picks to your portfolio, one long, one short.
Which one do you want first?
Let's do the negative one first.
All right. Short, stamps.com, STMP.
Okay.
All right. So the some of the interesting ones that I have, like the New York Times, I'm calling out as like we've got some sort of information edge, right? Like for New York Times, we operate Benzinga.com. We know, okay, our traffic is crazy. This is happening across the publishing world. I talk to the advertisers. They tell us, yeah, traffic is crazy across the world. Here's my one with stamps.com. We are used to getting a ton of physical mail, both promotional, people sending us checks, that sort of normal thing into our Benzinga physical mailbox. I went and checked last week on Thursday. So after 5 days of not anybody checking the mail, we had 3 items in there. So I'm basically thinking of that as a proxy to the amount of physical mail that people are sending is going to be way down, especially all these small businesses. And I bet that once a lot of it moves electronic, it's not going back to paper. Like a lot of the people our clients who pay us with paper checks have switched to paying us electronically. And I've got no reason to think that, once they, everybody's back in the office, that they would move it back to paper. So that's why I don't like stamps.com.
All right, just let me just throw in a contrarian thing here with
Yeah.
with the deliveries and everyone ordering everything online and Amazon. I mean, I know they have their own delivery services. Do you see that is not enough of a positive catalyst to upset the negative? Because I for
Yep.
years I'm like, why do people send me this stuff? Why do I even go to my mailbox and pick up this junk? So
Really.
you see that as this is like the tipping point now for people are going to be cutting expenses and whatnot. But I don't know. I don't know enough about stamps.com business to tell you, what they get, the Amazon stuff. What I will tell you though, Mr. Luke, is that this thing's winding up here. And 129 is been the area, three of the last four highs, and
Mhm.
making some little bit lower lows. Are you just trying to short the stock outright? Or are you just doing it with puts, or are you just thinking of doing it?
Nope. I'm short it outright. And this is another one where I'm just going to hang out till the earnings report. It's not a large position.
Okay.
I'm got plenty of breathing room if this thing does rip back up to 180. But I got a small short position in it, and I'm going to hang out till earnings.
Okay, Spinner is who's pretty good. He's in the pre-market prep chat.
Okay.
He says that Stamps dominates e-commerce, and I didn't know that information, and that a lot of shop and Amazon resellers use Stamp.com. So there's just a little bit of a contrarian view on things. But Luke, you know your risk reward ratios, and you'll stick with it. We'll see what happens. We know changes are coming in these markets. Okay, so that was your bearish play. What's your bullish play?
All right. Elf, the cosmetics company.
Okay.
And tell us what kind of first-hand knowledge you have of this.
My girlfriend watches a lot of beauty videos on the internet.
Oh my God! Come on.
No, okay. So here's this one. Um, all month, right? We've been seeing these companies either cut guidance or more commonly they are pulling their guidance back. Right? They're canceling their 2020 guidance. Elf stock is hammered. They came out today and said they reaffirmed their guidance for the for 2020, which has been a rare thing to see. And so, the stocks right now after the sell-off, it's trading at less than 2 times sales. It's trading at about 8 times EBITDA. The fact that they came out and they said that they're going to hit their targets they set out before the whole coronavirus issue, I think that makes this company stand out a little bit.
Okay. It's rebounded off the low. Nothing crazy. This thing got in. How low did you get in Elf Beauty Supply here? You got to 758, and you've got up as high as 1140, and now you're just kind of hanging out. So, third lower close in a row. Boom. I don't know. You got a pair of lows in the lower 9 handle, 919 and 935. So you'll keep an eye on that. 359, Luke. I can wrap things up here. You got anything else on your radar?
That's it for now. I mean, let's see how we close today, and let's see what happens overnight.
Yeah,
I actually say I like that Elf play more than any other of your picks so far, Luke. But Joel, as we head into the close here, under a minute left, we are approaching the high of the
great
day.
day. Yeah, great day. Overall, it looks like we're poised to close over 2,600. We did do that on Thursday, so I can't say the first time closing over 2,600. We hit a high at 26, 21.75. Quick pullback here going into the 4 p.m. I like to watch the 4 p.m. close, which is when the stocks are actually closed, and then the S&Ps like to do their own thing from 4 to 4:15. And then they close for 15 minutes, and then you see some mighty good action a lot of times between 4:30 and 5, beginning the news flow. But let's just call it here 26.12 and a half, 26.13. The last print there up roughly 3.45%. Dow Jones adds 688 points, up 3%. So good overall day for the market.
I think we call this a bull market.
You can call it what I'm not big. It's a good market. I will say that. It goes both ways, and let's see if we can get the same follow through tomorrow.
All right. For Luke Jacobi and Joel Elconin, I'm Spencer Israel. Everyone have a great rest of your day. Please remember all the information on this broadcast meant to be used as informational purposes only and not for investing or trading advice. We'll be back with you tomorrow with Dennis Dick at 8 o'clock in the morning. In the meantime, have a great rest of your day. And as always, be safe out there.